All right, greetings all. Thank you for tuning in. Let's take a quick look through the markets here, or maybe not so quick, depending on how it goes. Um, First thing I want to look at is interest rates. So we're going to look at the 10-year yield here. All right, so we're coming back a little. Now, this is going to be kind of important to watch over the next few days or maybe a week or so. Remember, when we look at an interest rate, it's the inverse of the bond. So if we invert this, which would be this, did we get to support? Are we going to rally? You know, a lot of times things rally after they get to support because the buyers who create the support start to outbid each other. It creates this like snowball effect. It's not unusual to have a little bit of a move higher, but today's action was pretty weak, right? It looked like there was going to be a rebound, and this is where it opened, and this is where it closed. So the buyers basically gave it all back today, or the sellers overtook them. I guess there are various ways you can look at it, but this ain't an English class, and I speak good. But this is pretty weak action. So now we're looking at the yield. All right, now I'm confusing myself. All right, let's see that here. Yeah, so it's looking like bonds could go lower, which means interest rates are going to go up, and that's bearish for the market. All right, now let's take a look at the S&P 500. It's kind of interesting how, so we had a good move today, higher, gapped up. Let's see what happened. It's interesting how on the news they talk about the Dow Jones, and if someone says, how did the market do today or whatever, they're referring to the Dow Jones. In the institutional trading world where I come from, no one really pays attention to the Dow Jones. And the reason why is the Dow Jones is what we call a price weighted index. In other words, the higher the value of a stock, the more influence it's going to have on the index. So you could have a $1 million company that has a $100 share price, and that's going to, a $100 share stock price, and that's going to be more influential than a company that has $1 trillion market cap that has a $20 stock price. So the S&P 500 is really kind of the go-to, the main thing that people focus on. So we gapped up, but still in a downtrend here. And, considering what's going on with interest rates, I still kind of think the market's going to go lower. I mean, I'm not like a huge bear or anything like that. But one of the things that we can do is we can go look at the sectors that make up the S&P 500. And we call this the SPY because it's the SPY ETF, hence the symbol. Or, man, I still got the COVID. I'm feeling a little weird. But yeah, so the ETF symbol is SPY. So here we can see the sectors. Information tech is 31%. Financials are 13. Different sectors are in the driver's seat of the market at different times. And being a successful trader, a big part of it is knowing what to pay attention to at certain times. Certain things are more important at other times than others. Certain things are more important at other times than others. Yeah, that sounds pretty good, right? Maybe I should turn this into a literature class. You guys ever read William Faulkner? Man, his stuff is insane. All right, so here's tech. So, so I would say right now, maybe tech is worth watching a little bit. I don't think it's in the driver's seat. Notice how we got into resistance right around this former kind of support level here. Now, why did this rally stall out right here? Well, people that bought here went underwater and they're like, oh, it's back up to the price I bought at. I can get out at break even. So remorseful buyers from here, placing sell orders here, creates resistance. Levels form because of psychology. Don't ever forget how important it is to understand psychology if you want to be in the market. This is another illustration of buyer's remorse. People buy at the peak and we go lower. And what happens? It's the same thing. People are like, if it gets back to my level and I get out at break even, I'm going to. So buyer's remorse can make what was support become resistance. Buyer's remorse can make what was resistance stay intact. Now, I'll just do a real quick look at the big three here. NVIDIA. I mean, you can kind of see it right here, right? I mean, NVIDIA is obviously a pretty volatile stock because it's so popular. But, same kind of concept. We ran into resistance at a level that was resistance. Oh, you know what? This is a good example of, this is a good technical analysis right here. A technical analysis. Man, I'm sorry, everybody. Ever since I got the COVID last week, I've been kind of out of it. I feel much better now. But anyway, this is what we call the old false breakout. And false breakouts are good signals in and of themselves, good contrarian signals. So here we have resistance on this particular day, as you can see, to basically within $1. We had resistance at the same level. The next day, NVIDIA opened up here, and what happened? By the close, the sellers overpower the buyers and drive it all the way down. So it looked like it was going to break out, but it didn't. This is what we call the false breakout. When breakouts happen, the stock usually spends a couple days consolidating, and the level that was resistance can turn into support. And that sets the stage for the move higher. Now, this is because of seller's remorse. People sell and the price goes higher, and like, if it gets back to my sell price, I'm going to buy my shares back. So that didn't happen here. False breakout. These tend to be good contrarian signals. And sure enough, look what's happened. Since the false breakout, the stock is down like $20. This is what we call the old bearish engulfing pattern. It opened here in the morning. It looked like it was going to be another up day, that this uptrend was going to continue. But what happened? By the close, the sellers knocked it all the way down. The trading action engulfed the prior day's trading range. So this is in candlestick trading. We call this the bearish engulfing pattern. In Western terminology, we call this an outside reversal day. Doesn't really matter what the name is. The bottom line is the sellers took over in one day and the price went down. And, I know I talked to a couple of you about where to cover. And, I said right around 130, and yay me. Once again, I was right. People are like, dude, you make these like great market calls. And it's like, no, I don't, man. I just look at the market. I let the market tell me what to do. I don't know what I'm doing. It's like, hey, man, things that get to support tend to rally. Things that get to resistance tend to sell off. It's pretty much that simple. All right, so I don't see much here. Now, let's go check out our financial sector, because I know there's been a lot of stuff going on in the banks. Something doesn't look right. There we go. We got to go for funds. Yeah, so gap up. Now, again, another lesson here. Where did today's rally end? The same price that had been support. So it's not a coincidence. So I would say that right now this is going to be in the driver's seat of the broader market. If there's one thing I'm going to pay attention to, it's what happens here. Because if the financial sector can break this resistance, the level that had been support, well, that's going to be bullish for the broader market. Just like we look at the sectors to see what the broader market's going to do, we can look at the industries that are within the sector to get some insight into what the sector is going to do. So now I'm going to look at the companies or the industries that make up this. So financial services, banks, capital markets. Berkshire Hathaway is the biggest company. JP Morgan. I'm really sick of Jamie Dimon. It's like, dude, go friggin' away, man. It's like the guy is wrong all the time. Remember when he saw the economic storm coming? Like, it's paid friggin' millions and millions. I mean, he makes enough money in 1 month that the average person can retire on for the rest of their life. And he's always wrong. I mean, I don't know. You guys got my email address. Let me know the last time he was right about something. I mean, seriously, man. Just shows you that, sometimes it's more important to be lucky. Oh, all right. Here we go. Trading idea on Mr. Diamond. Maybe you can make some money off of them. Now, why do I say that? Well, the stock is overbought. We're going to put in the relative strength index. So, I mean, you can see it's overbought. Now, you might say, like, Mark, it's the RSI line is not above the horizontal line, which is the traditional way of determining whether something is overbought or oversold. But you have to remember, we're measuring where we are now versus 14 time periods ago. So if we go 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. So it's comparing here to here. It doesn't account for this big move up here. But anyway, where's my damn pen? My dog Clifford always takes my pens. All right. Anyway, this is on the idea for a reversal. Short idea, meaning buy puts. Don't short the stock. What is the trigger? If the RSI starts going lower, When this line turns, that could be the trigger to tell us it's time to jump in here. All right, so I got to remember that. Been watching Tulsa King, man. It's awesome. It's over now, though. Bummer. I saw Landman, too. That's really good. If you're into, like, violent, like, mafia type stuff like me, it's pretty good. Now, what I just showed you is let's look at this and let's talk about, being in the driver's seat. The financials are overbought and they're at an important level. This could influence the broader market. If we look at the healthcare sector is kind of neutral. It's not overbought, it's not oversold, trading in the middle of a range. This is probably not going to have an effect on the broader market. So this is what we mean by, if you know what's in the driver's seat, same thing here. Consumer discretionary, I don't see much here. Communication services, I don't see much here. Same thing, ran into resistance at the level that was support. Industrials, might be some reversal ideas here, but this is kind of a smaller sector. Now, I know you guys made some killings in the consumer staple trades we talked about last week. And I appreciate the positive feedback, but remember, pride comes before the fall in trading or in anything. So this still looks kind of interesting, though. Again, we're at support. We're oversold. There could be a bounce here. Things that are oversold and at support tend to move higher. And just like we looked in the financials, we can look in the consumer staples for some potential trading ideas. I'm going to date myself, but when I started doing this, ETFs didn't even exist. So here are the biggest holdings: Costco, Walmart, Procter & Gamble, Coke. I know Procter & Gamble looked pretty interesting, so we could just take a quick look at that. Yeah, I mean, it's I would not have a problem with going along this. Colgate. I mean, it looks like the reversal here has kind of started. All right, let's keep moving on through these sectors here. So industrials, healthcare, staples, energy. So we can't look at energy without looking at oil. And let's see what is going on there. Yeah, look at that. Now, this should awe you. I mean, this is reason enough to sign up. I mean, I charge friggin' $20 a month, and I got to start charging more. But if you're in now, you're in. Your grandfather. But prices are going up soon. All right, we don't give away washers and dryers. Sorry. This is the oil market. Think of how big this is. Think about, all this stuff going on in the Middle East and all the oil wells all over the world and, this, that, and the other thing. And like I was talking about Landman or oil companies. I mean, this 6730 level has been support for, we're coming up on 2 years now. And considering how big this market is, don't you think it's amazing that we can find these precise price levels? Now, there are people who are listening to me right now that are fundamental managers or analysts. They can't explain this. Might as well just be like, don't even ask them. A trader will say, oh, there tends to be support at levels that were support before. Because forget supply and demand. Well, I'm talking about not supply and demand fundamentally, but I'm talking about supply and demand in the market. There are people that sold at the support level that regret doing so when the stock blasted off, or in this case, I mean oil. So when we get back to their level, they're like, oh, I can buy it back now at the same price I sold it at. I'm going to do that. The reason why we see the same patterns on charts of different things is because regardless of what people are trading, they have the same psychology. Whether you're a Bitcoin trader or, an oil trader or a stock trader, people experience the same emotions. And this is what shows up on charts. All right, so here's Bitcoin. See, support at a former support level. Let me look down here, support. So the same thing, just like in oil, people that sold are like, made a mistake. If it gets back to my price, I'm going to buy back. So that's Bitcoin. I don't know. Probably going to hit a little bit of resistance there. Not seeing too much. All right, let's just quickly finish up here with our material sector. Yeah, look at that reversal. I know we got in on this too. See that? Where do we find support? The level that had been resistance. Utilities, again, support at a level. Now, what could be more different than oil in the utility sector? Well, I guess you can make some obvious comparisons, but the point is support at a former support level, resistance at a former resistance level. You get resistance at former resistance levels because of buyer's remorse, just like we talked about, and you can see it right here. You don't need to be a former hedge fund trader or a market guru. And as someone who was a former hedge fund trader, I should say, is a former hedge fund trader, believe me, being a hedge fund trader is not a big deal. There's plenty of traders that are hedge funds that are friggin' idiots. Look at this. And some of them are so arrogant, especially buy side traders. Well, actually, all hedge fund traders are buy side traders by definition. But anyway, now look at this. Where did we find support in real estate? The level that was resistance. People sold back here and they're like, if it ever gets back to my price, I'm going to buy my shares back. So if you have enough remorseful sellers from here, placing buy orders here, the level that was resistance turns into support. Look at this. The level that was resistance turns into support. One of the things you need to understand about trading if you want to be successful is that some price levels are more important than others. People overthink this stuff. But I think going through these markets tonight, you've seen proof that it's true. I mean, right up here, resistance at a former resistance level. It's not a coincidence that this is where this rally faded. So enough people from here who bought are placing sell orders here that it made it resistance again. All right. So anyway, to review, it's all about the financials, and I will see you all tomorrow. Thanks, everyone.